Hello, hello, hello. It is me. I wanted to shoot this quick tutorial to address some of um, the dialogue that we had in our group. So this is specifically for those that's in the Telegram group. And I just wanted to make sure I clarify because oftentimes when you're texting, you really can't get your message across clearly. So I want to make sure that there's no confusion. So I am piggybacking off of Nikki. Hey, Nikki. And we were basically talking about the top-down analysis, and Nikki was absolutely right when she said that we look at the higher time frame as when we're doing our top-down analysis, so that we can get the overall trend, the overall trend. And with the triple arrow, we really do have the best of both worlds, so it could be a little confusing. So I want to clarify. I had mentioned in the chat that whatever is going on the time frame that you happen to be on, no matter what time frame that is, we on the hour time frame now. So whatever's happening on the hour time frame has already played out to a degree on the lower time frames. That's quite different from doing the top-down analysis. The top-down analysis is used and it's very effective and beneficial for you to do that so that you can get the overall picture of where price want to go and the direction that is going in. And so that's important to know. Now, because we have the triple arrow system and we have the best of both worlds, the triple arrow system allows us to counter trend trade. Now, under normal circumstances, it can be a little risky to counter trend trade if you really don't know, all the nuances of trading, to be perfectly honest. Because when you counter trend, you got to understand that you're trading a pullback. You're trading a short run compared to the overall direction that price wants to go in. So at some point, keep this in mind, at some point, price will go back in the direction of the trend. And if you're not sure how to make that determination, if you're not sure how to identify the trend and all of those things, then you can truly get caught in the reversal and it would just take you on a complete roller coaster. And it can potentially blow your account. Now, with the triple arrow, we have the benefit of the arrows and following the arrows because every time frame the triple arrow will appear. But what you want to understand is if you are on the hour, for instance, chart and the 4 hour is in a different direction, if you bullish on the hour and bearish on the 4 hour, you have to understand that the hour is a pullback from the 4 hour. And if the higher time frames are conflicting with your hour time frame, you have to understand that that's going to be a very short run. That's going to be a short run. And so even though you have the arrows and you can trade arrow to arrow and all of that, within that run, price will go back in the direction of the trend. And when that happens, you can be gone, for a while. It could take you on a very long roller coaster in the negative. And so that's why I stress that we use the 20 pip strategy because again, the market will give you 20 pips, right? So just use the 20 pip strategy so that you can ensure that you're going to pretty much be in and out of the market and really start perfecting the ability to compound your account. Really start doing that. The 20 pip strategy worksheet is in Excel spreadsheet, I should say, is in the file section of the group. So definitely print that out. Go by that. Is based on the trade, not the day. So for each trade, it has the corresponding what you call lot size and what your balance would be, and after 30 days, what you could potentially earn. If you stick to that, you'll be on the safer side of things, and you're still able to compound your account. And also, when you're compounding your account, you can do two trades, right? You can do two trades. So let's say we in CAD JPY, all of our confirmations met. We just put in two trades at the same time. And then you can also and you can still go for your 20 pips. Now on On the first trade, you want to definitely put in your TP at 20. But the second trade, this is what I do. The second trade is leave the TP, blank. And once you hit your take profit on the first one, you have the second one running. Now, when that second position runs an additional 20 pips, then you can put your stop loss. And I hope this is not confusing you guys. And if you want, I can just do a session strictly on that. But basically, you're trailing it, basically. But we're doing it on a manual instead of using the trailing stop. You can use a trailing stop, but to be perfectly honest, I tend to mess my account up when I do that. I have more success when I do it manually. So once the second trade hits 20 pips, then you want to go ahead and put a stop loss at the take profit of the first position that you took. Again, it sounds like I'm confusing you guys, so I don't want to do that. That sounds like a session in and of itself, and we will do that. And that way, you're maximizing your pip potential without the risk. Without the risk. So let's say that second position is it hits your stop. You still walk away with your 20 pips. And let me just say this: the entry because the entry would pretty much be the same for both positions. So once the second position, your first position hit TP, you out of it. Now you only have one position running. When your second position hits another 20 pips, then you're going to put your stop loss at the entry price of that second position. So if it pulls back on you and hit your stop loss, you're basically in a risk-free trade at that point. If it hit the stop loss, you didn't lose anything. You got your 20 pips. That makes sense? So that's one way of doing it. There are other ways that you can compound as well. And like I said, we'll just do a separate video on that. Let me get back to what I want to talk about. Okay. So that is what you want to consider when you are trading and the higher time frame does not give you directional support on the time frame that you're actually trading. So you want to consider that. Just do your 20 pip and you will be good to go. Now, as an example, when I say that what's happening on the higher time frame has already happened on the lower time frame, this is how you can catch the move early if you wanted to do this. So you have your big arrow, okay? You have your big arrow. I typically wait for my first small arrow. Put the first small arrow, I'm on an hour time frame, and I'm going to put a vertical line on my second small arrow, right? And then drop down to the 15-minute chart. And as you can see, okay, then we're going to go to that right here. Okay, right here is the first small arrow on the hour. That's what this line represents. So what do we have here? Look left. What do we have? Triple arrow. See, it already happened on the smaller time frame. It hasn't happened on the hour yet, but it happened on the 15-minute. So at this point, you would just do the same thing that you would be doing as far as your confirmations. Make sure that you look at your MACD. What is the MACD saying? Oh, the MACD is beautiful. We got our MACD line that crossed over the midsection, the 00 line right here. And then what are we waiting on? We're waiting on the candle to close below your 50. In this case, we have a bullish candle. I would wait for a bearish candle to close below the 50. And then voila, I'm getting in the trade. And you can get in the trade and take it from there. And your TP, you can base your TP off the 15-minute, or you can base your TP off of the hour. But at the end of the day, we're going to keep it simple, and we're doing 20 pips, whether it's on the 15-minute chart or the hour chart. Then, just plot out your 20 pips, and you will be good to go. So that is an example of what I was talking about when I said, what happens on the large has already happened on the smaller. And then the top-down analysis, of course, you want to start with your monthly and work your way down. Work your way down from the monthly and the weekly and the daily is going to give you your trend. The daily, you can base your trend off of the daily. You don't have to base it on the monthly, because most often that's when you get into swing trading. So you really don't have to go that far up. The daily it will suffice, is perfectly good enough to determine what the trend is. So if you're on the hour, you go up two time frames, and you're looking for directional support. Now you don't need the triple arrows to be fully formed on those higher time frames. All you need is the big arrow to provide directional support for the time frame that you're trading on. So as I mentioned, on the hour, 2 hours, two time frames up. If both of time frames support the direction of the hour, you're good to go. That's a strong move. That's a strong move. If it does not, just understand you're just getting in and out. You're just getting in and out. I know a lot of you that's in the group, you all are doing the 20 pip strategy. So even if you're doing that, it really doesn't matter, because you're just getting your 20 pips and you're focusing on compounding your account. Make sure that your confirmations are met, and then you can take the trade. You can take the trade, and you should be fine. You should be fine. There was one other item I want to say. Darnell had mentioned something that sparked something in my head. I'm just going back through. But definitely what Nikki was talking about, I think that I've covered that. And so you were spot on, Nikki. You were spot on. Higher time frames definitely give you the overall view. And like I said, I would just focus on the daily, because you're only doing 20 pips. You're only doing 20 pips. Okay, so I thought it was something Darnell had mentioned. I'm just so super happy for everyone that's in the group. You all are engaging and taking this thing serious. I think that if no other time, this is a time in the world where we need to be taking this serious. We need to make sure that we get what we need to support our homes and our households and our families. And trading is definitely going to allow you to do that. We have the triple arrow system, which is a GPS to the destination we're trying to reach. The only thing that we have to do is follow our confirmations. Don't try to rush a trade, force a trade. Manage your emotions. Use the alert. Use the alert so that you don't feel compelled to be watching the market, watching the price. That's just going to create anxiety. That's all it's going to do. And so use the alert. Now, yes, there's a cost. I would recommend the Trading View, which is $30 a month, $29.95. There is a cost. You're not going to, make thousands of dollars and don't expect to pay for tools that's going to help you to do that. So we have to get our mindset right as well, because this works. This is not on trial. This works. The only thing that we have to do is work it. That's it. That's it. So the alert is a pivotal part of the Trading Made Easy trading plan. And like I said, it's just going to allow you to live your life while the market is doing what the market is doing. You're positioned in the right place. Let it do what it's going to do. You're going to have pullbacks, and you're going to be, in retracement and things. That's just the nature of the market. And I apologize. That's just the nature of the market. So don't fret that. Watch your lot size. Use the spreadsheet. It is set for conservative. Not only conservative, but super conservative. And if you follow that, you will not be at risk, at much risk, because again, price is king. But all things being equal, you won't be at such a risk of blowing your account, because the 20 pip strategy is set for super conservative. Can you change that? You can change that. But just remember, the more aggressive your plan is, the greater the risk you put your account in. So just, everybody have to find their trading style and how you trade and what's your trading temperament, and whatever it is, just understand the risk, and always, always, always use your confirmations. Always use your confirmation. So I hope that that helped. And like I said, we're going to get back together so that we can talk specifically about compounding and how to maximize your profits with minimal risk. With minimal risk. So I hope that that helped. You all be safe. Lord knows, please be safe. We are in a time that is just unprecedented, and so we have to be safe and protect our families and make the sacrifices. I know I'm in Virginia, and we just had a executive order that we are not to go outside our homes unless they're for specific reasons, and those are essential type scenarios, hospitals, grocery store, that kind of thing. So that's where it's going, and eventually all the states will be instituting an executive order. So what happens to those individuals, that are impacted financially, whether their jobs shut down or let people go? I'm hearing these types of things every single day. You do not have to be in a financial deficit. You do not. Just follow the rules. And I keep emphasizing that because that was an area that I struggled with, in the beginning. And truth be told, I never get relaxed with that because I can slip right back in there and want to force a trade or, do stuff that I don't have no business doing. And so I've lost enough money to where I'm just not going to do it. I'm not going to do it. And I just really, really urge you all to not do it. Just follow the rules and you'll be fine. You'll be fine. So with that being said, God bless you all, and I will see you on the next video. Bye bye.